All right, hello everyone. Welcome to a very important video. Um, this video is going to be very important, in depth about SMT divergences and what they are. And if you are new to ICT concepts, or even if you're an experienced trader and you want to get some refurbished knowledge on SMTs, this will be great for you. Because every once in a while, I myself have to get a little refreshment on some concepts every once in a while. So I'm going to be showing you guys examples and going over in depth SMTs, what they are, and how to use them in your trading. So getting right into it. First off, what are SMTs? So an SMT is a divergence between two correlating assets in the market, which could determine and to help identify where manipulation is happening and a potential reversal. So SMTs, it's a divergence between two correlating assets. For example, each asset in the market has a correlating asset. So for my examples in today's video, we're going to be using NASDAQ and the S&P 500. Those are both correlating assets and they move similarly, so you can use those for SMTs. Same thing for gold and silver, same thing for Bitcoin and Ethereum. Every market has its correlating asset. So here is an SMT example. So on the left right here, this is NASDAQ, and on the right here is ES, or the S&P 500. Remember, these are both correlating assets, so they move similarly. So as you can see right here on the left, NASDAQ came up, made a high, we came back down, then retraced higher, and we took this high to the left of us. But at the same time, the S&P 500, or ES, did not. Meaning NQ took it first and ES didn't, which created that SMT divergence. So for those who are new, if you guys can understand that, I'll repeat it one more time. NQ took the high before ES did. So they created an SMT with both the correlating assets. So before we go further, I want to go over higher time frame bias with SMTs. Yes, time is fractal, and I say that in all of my videos every single time. Time is fractal. All the confluences you see on the 4-hour time frame you can find on the 1 hour, 15 minute, 30 minute, 5 minute, 1 minute, 5 second, 1 second. You can 100% use SMTs to help you gain a bias to where you expect the market to draw towards. Just to the fact being that the higher time frame model and bias is the most important factor of your trading. So how can we use SMTs in the market to win more? So we must understand first, guys, that SMT divergences are only as powerful as they claim to be with market context. I use the word context a lot, and I want you guys to understand by context in the market, I mean information being fed to us that the market is showing us. Because as traders, we are simply just reacting to the information that's given to us. We're not guessing where the market's going to go, right? We're not guessing that it's going to go to buy side. We're not guessing that it's going to go to sell side to a certain level. We're letting market show us context, what it's doing, of where it wants to go. We're listening to it. We're letting it show it to us, and we react off that information. and apply risk. So you cannot just simply just see a random SMT on the 1 minute, on the 5 minute, or 15 minute, or whatever, and assume the market's going to validate it and cause a reversal. We must have context with it aligning with our bias. So here is a market example. This might not be the best example, but it still applies to every other way. So as you can see to the left right here, you can see my cursor, we took this high with news, took the internal high. We then ran through this bullish fair value gap. This is the 5-minute time frame, by the way. Created a change in the state, had a huge displacement candle down, and the higher time frame drawn liquidity is this unfilled fair value gap. So at this time in price, I'm looking to see a retracement back into this 5-minute imbalance for it to get filled or mitigated, and then eventually see a retracement lower, push down to this internal level, which is the internal drawn liquidity and the external drawn liquidity, right? So this is what I'd be looking for. So then zooming in, this is NQ, by the way. Zooming into the 1 minute, price retraced into the higher time frame PD array, and I mean the 5-minute bearish fair value gap, that aligns with our higher time frame bias. So you guys remember what I said my higher time frame bias was? It was that unmitigated fair value gap, right? A fair value gap can be a drawn liquidity because it's one of the 4 reasons why the markets move: to retrace the equilibrium, to hunt liquidity, to generate liquidity, and to hunt for PD arrays, to fill PD arrays. I'm sorry, I had a blank. Anyways, price taps into the 5-minute fair value gap, and once it taps into it first right here, we then go lower, and then what do? We retrace back higher, and this is NQ. NQ takes the high, and what did I show you guys earlier? ES did not. So this is clearly manipulation. So we retrace this higher to manipulate, and then creates an SMT with ES to then instantly dump towards the internal drawn liquidity, which would be this low, and the higher time frame drawn liquidity, which was that unfilled fair value gap. Now in this example, this does not happen every single time there's an SMT, a good SMT, I promise you. This just happened to be this wasn't even a news candle, which is weird, but this just happened to be a large candle, and in like the 1 minute time frame. And this just goes to show, I mean, the market could have dumped like this whenever it wanted to right here. It could have whenever it wanted to, but no. It happened whenever our model aligned, whenever we retraced into a higher time frame PD array, whenever we swept internal buy side, whenever we created that SMT to manipulate, then we dumped, right? So let's go on to the next one. So this is ES in the same scenario. We had the same thing happen. We had this higher time frame PD array got formed. We tapped back into it right here. We then go lower, right? We have little scalpers right here selling on this way down, trailing their stops, and then we manipulate higher. Boom. We create an SMT, and then we just crush down to these relative equal lows and the higher time frame draw that ES had. So going on to the next one. So using SMT divergences for the higher time frame. So like I said in the beginning, the SMTs, any concept in ICT concepts is fractal. You can use it for whatever time frame you want. As long as you know how to align it perfectly, Not perfectly, but as long as you know how to align it well, then you'll be okay. So with SMTs, for example, we're using the 4-hour chart on NQ, and as you can see in this image, this is the 4-hour time frame, proving that SMT divergences are fractal along with all other concepts. So like I said, if aligned properly, you can use SMTs for your higher time frame bias, and then after identifying that, you can zoom into internal price looking for the same exact thing. Because like I said, price is fractal. You can look for the same exact thing on every single time frame. Now let's take a look at ES on the 4-hour and let's see what happened. So this is ES. This is also the 4-hour time frame. You guys can check this out. This was, if you guys don't believe me, you want to look at it yourself. This was February 13th. This was literally, I meant not February 13th. I apologize. This was not that long ago. I'm sure you guys can find it. This is just when I took the screenshot. I apologize. Um, I believe it was last week or something. Anyways, so on ES, right? This is the 4-hour time frame. Even it being choppy, right? As you can see, this isn't clean PA, right? We're chopping, chopping, chopping. We get close to the buy side liquidity level, and then we went down, right? Looks really bad. So even it being choppy, the algorithm still delivered to what it needed to do. So, and price held the higher time frame bullish for value gap. So even though the whole time we were chopping around here, we still held this bullish for value gap. Right? We come back down, we wait. We come back down, we wake up. We come back down, we wake up. And look at this one, this candle right here specifically. We even came back down, just peaked outside of it, and then we shot straight back up. So we chopped all this time, and then once we created an efficient SMT at the lows with NQ, then we shot back up. Oh, sorry about that. So let me explain something to you guys. So you can't look at this and assume that there's no algorithm to this. People might call you crazy, but if you see the precision, then you slowly start to believe that there is an algorithm. And thinking about it like this, if price truly was random, like the retail traders think that it's random, then this large move would have happened anytime right here without a SMT or a sell side up or whatever, just right after a chop. But no, it happened after we held this bullish for value gap. We swept sell side, and then we had a SMT right at the lows just as it peaked below this bullish for value gap. Then we retraced higher efficiently straight towards the buy side level. So that seeing that efficient price action is very, very, very what's the word? Convincing that there is an algorithm to this, and ICT concepts is a way to view the market to help you understand how the algorithm moves or to understand it. So moving on to the next one, our video recap. So just going over some main points before I end the video, just real quick. So if you guys have notes or anything, but an SMT is a divergence between two correlating assets in the market which could determine and to help identify where manipulation is happening, right? Two correlating assets, gold and silver are correlating, Bitcoin and Ethereum are correlating, Nasdaq and the S&P 500 are correlating, right? All it takes is one simple Google search, and you can find out whatever market you trade. There is a correlating asset for it if it has liquidity. So, an example of an SMT, like an example in our example in like the second slide, I believe, or third. If ES takes a high and NQ does not take that same high, that is an SMT, possibility for reversal. But, of course, we don't have that if there's not any context to the SMT. And then finally, SMT divergences can be as powerful and used on any time frame due to the fact being that price is fractal. And that's the point I want to get to you guys today. That you can even look for SMTs on the 1 second chart and they'll still be as effective as they are on any other time frame, as long as you have context, right? Information that's being told to you, like PD arrays, what market maker model are we in? Did we just sweep buy side or sell side? Where's the manipulation happening? Right? So it's very, very crucial you guys have context when using SMTs. Right? So I want to thank you guys for watching this video. I hope you guys found this very helpful. Thank you, thank you. We're on the way to 1,000 subscribers. We are, like, at the time of this recording, I believe it's 150 away. I know we can get there. We're so close. Thank you. And I might do something special besides opening the Discord and adding a webcam to my videos. I might do something special. I'm not sure yet, but I know we can push to get there. So thank you guys for your support. Drop any questions in the comments, like and subscribe if you're new. And we're going to keep these videos coming for you guys. And I will see you guys in the next one. Peace out.